Well, good morning, everyone, and welcome to today's Fireside Chat with Fred Thiel, the CEO at Marathon Digital. I'm James West. As most of you know, I run the Sustainable Technologies and Clean Energy team here for Evercore ISI. Marathon Digital Holdings is a digital asset technology company which engages in mining cryptocurrencies with a focus on the blockchain ecosystem and the generation of digital assets. The company was founded in 2010 and is headquartered in Las Vegas, Nevada. Fred Thiel is the CEO. He is a respected expert and frequent speaker on fintech, digital assets, blockchain, Bitcoin, crypto mining, the Internet of Things, artificial intelligence, venture capital, private equity, and of course the digital transformations of companies and industries, and provides deep technology industry expertise and strategic advice on transformational value creation, and has over 30 years of operating experience leading companies in the cryptocurrency, digital assets, semiconductor, data communications, and other industries. Fred attended the Stockholm School of Economics and executive class at the Harvard Business School, and is fluent in English, Spanish, Swedish, and French. So three of those I'm not fluent in. So congratulations, Fred. Fred, thanks for joining us today. I appreciate having you on.
Glad to be here.
So for those of you listening on the line, if you have questions, please do put your questions into the Q&A box, and I'll make sure to get them over to Fred. Obviously, I have plenty of questions that I'll be asking myself, but we always want to make these things interactive. So maybe, Fred, if you could start, could you share with us the origin story of Marathon Digital and the company's mission, goals, and priorities?
Sure. So coincidentally, Marathon actually started as an actual mineral mining company, mining vanadium. And like many companies whose origins are in the microcap world, they failed at that. Then they were in the oil and gas industry for a little while, so some energy background. And then company did a brief stint in real estate, all the while kind of changing kind of ownership and control groups. And then went into the patent space and became a patent troll, and was formerly known as Marathon Patent Group. Marathon Patent Group had one claim to fame, really, which is it owns still to this day one of the underlying patents for Siri and Alexa. So a voice control of a mobile electronic device through a limited instruction set. And Apple paid a hefty license fee to Marathon after some litigation. And then Marathon spent all that money trying to litigate Amazon. And to this day, that case is still open and pending. But Marathon, as you know it today, doesn't spend any money on that at all. That's done. Fortress Investments took over that patent, and they're busy. Their IP litigation arm is busy doing that. So that's kind of the history. In 2017, a group, Marathon Patent Group, had essentially run out of money, raised some financing through some less advantageous notes, and a group took over control of the board, and they had decided they wanted to go into the crypto space, and they hired a gentleman by the name of Americo Komodo to kind of recast the cap table, fix the finances, and get it into the Bitcoin mining space. And I had known Merrick for about 20 years. I've been in tech for 40 years, and did a detour into private equity and venture capital, but had been spending the period around 2015 to 2017 in the crypto space, specifically around Bitcoin. And he asked me to join the board to see if we could figure out how to make Marathon a valuable company. And in early 2018, I joined the board, and then we set about on the course of figuring out how to get into the Bitcoin mining business, raise capital, and grow the company. And from very humble beginnings of buying secondhand miners and plugging them in Quebec, Canada, to being the largest miner in the world across 3 continents with 11 sites, and growing at a very rapid rate. We kind of figured it out, you could say. In 2023, we essentially grew 3x over where we were in 2022. This year, we'll grow another 2x over where we were last year, and continue to be the largest miner in the world. Then also, we have since kind of evolved our mission and vision. So we really look at ourselves as a company that focuses on leveraging the nexus of energy and compute. So if you think about, this is something that Scott Galloway, the marketing professor at NYU Stern, talks a lot about. In the 80s and 90s, really 70s and 80s, energy companies were the most valuable by market cap on the stock markets. And then in the 90s and early 2000s, technology companies took over that kind of mantle. And today, with the advent of AI and digital asset compute, you now have this confluence of energy and compute coming together to form what will be some of the most valuable companies out there, we believe. And so we are essentially a company that leverages energy to secure the digital asset markets. The Bitcoin blockchain is essentially secured by the process of people deploying compute power and using lots of energy, and that's what helps secure it. And happy to go in more depth and explain that later. But what we also realized was that we also serve the energy markets very efficiently. So Bitcoin miners at scale can go in and work with utilities to balance grids. So if you think about the electrical markets, electricity demand goes up and down like this all day long, right? There's a small peak at 9 a.m., then there's a dip around midday, and then it grows slowly through the afternoon until between kind of 3 and 9 p.m., there's another peak. Well, the electrical grids need to balance supply to demand because the electrical grid is like plumbing. You can't put more electricity into it than is being taken out, or else the pipes burst. And so the grids need somebody who can help balance that load. And typically they do that by adding more capacity as needed. So battery systems, peaker plants, but those all make money by charging premium prices for their energy. On the other hand, Bitcoin miners like us at utility scale, as we call it, we can be buying 250 megawatts, 100 megawatts, large load as base load, meaning we consume it all day long. And whenever the grid needs it, we can do one thing no other industry can do. And that is we can shut off our systems in 10 minutes or less. And all of a sudden, all that energy is available to the grid without it costing the grid or the consumer a single penny extra. Whereas batteries and peaker plants cause the price of electricity to go up. And to give you an idea of the difference in price, where we're maybe buying energy in the kind of $30 to $40 a megawatt range, a peaker plant is selling energy at $5,000 a megawatt. So it has a huge impact on consumers. So that's utility scale mining. Then we realized that there is a lot of wasted or stranded energy out there that isn't being used, that could be used for digital asset compute, and more importantly, could be used to bring positive environmental benefits to bear, such as mitigating methane. So we today in Utah, for example, leverage methane gas coming out of a landfill. We generate electricity from it, and we mine Bitcoin using it. Now, what's the benefit of that? Well, twofold. One is methane is 80 times more damaging to the environment than carbon dioxide. And so we're turning something 80 times worse than carbon dioxide into carbon dioxide, so therefore mitigating huge environmental impact. But more importantly, doing that lowers our costs to do what we do. So it actually has an economic benefit for us. And it can lower our costs by upwards of 50 or 60%, which can make us one of the most energy efficient Bitcoin miners in the industry over time as we grow that business. The other thing we can do is take methane flared at oil fields, capture that energy, use that to mine Bitcoin. And then there's something really interesting. We can take biomass. So think everything from manure at dairies to the leftover products from ethanol and methanol manufacturing and everything in between. We can put those into what are called anaerobic digesters, which essentially takes it, adds a bacteria, turns that into energy. We use that energy. And here's a really fun fact. 50% of all the energy consumed by industry is used for generating heat. What we can do is, because our electronics generate heat, we can capture that heat and feed it back into an industrial process. So if you think about ethanol manufacturing, beer brewing, all sorts of things, they need to heat the substance they're using to make their product. And so if we can take the waste product, generate energy from it, and then feed heat back into their process, we allow them to not have to buy the energy to heat their process, and they don't have to pay somebody to process the waste product. And so essentially our cost of energy becomes zero. And that means, again, that we can do what we do for the Bitcoin blockchain at almost a net zero cost eventually, as these programs continue to grow and become a bigger portion of our business. And the last part of what we do is we're fully vertically integrated from a technology perspective. Just similar to Apple, we have everything from our cloud software down to the ASICs, that the application-specific integrated circuits, the chips, if you would, that run miners. And so we have the ability to do things with that technology stack that other people can't do. We have some of the most advanced liquid cooling technology, which allows us to do two things. It lets us operate our systems and totally ignore the climate environment we're in. So for example, we operate in the Gulf region in the Middle East, in UAE, where the average temperature is 110 degrees in the ambient, with 95% humidity. And we essentially take our miners and we put them into a liquid that cools them, not water. So we're not wasting water. This is a closed loop process. And we can run these machines all day long, no matter how hot it is outside. And then we can capture that heat and use it for something. Our technology is equally as applicable in the AI space, which is by far one of the most rapidly growing industries today, to cool infrastructure for data centers. So we believe we have this very diversified model where we're leveraging energy to stabilize grids, meanwhile producing Bitcoin and securing the Bitcoin blockchain. We're harvesting stranded energy and using it to generate heat, which we can resell back into companies while generating Bitcoin and securing the Bitcoin blockchain. And then we have technology that allows people in the Bitcoin mining space to do what they do in a better way, while at the same time also opening us up to the benefits of the rapid growth in the AI industry and potentially even the telecom industry around infrastructure cooling. So we believe it's a very diversified business. Again, we operate on 3 continents, 11 sites. So we have good diversification from a location perspective. And our expectations are by 2028, we'll have about 50% of our revenues international versus domestic, and about 50% of our revenues will come from things other than just traditional digital asset compute, such as energy trading, et cetera.
Wow, that's fascinating, and it's not something I think many people understand about Bitcoin mining and how that the intersection of the nexus with energy comes about. One of the terms that came up a lot as I was doing some work on your company, and maybe to help us start a more detailed conversation, can you help us understand what the energized hash rate metric is? And I know you recently increased your 24 hash rate target to 50 exahash. And so I guess, can you share with us what drove that decision too?
Sure. So if you think about the oil industry, you talk about how many barrels per day you can produce. Sure. Well, exahash is a measure of compute power. And for those of the audience who have been familiar with kind of the cloud computing world, you talk about things like teraflops and gigaflops. And so exahash is the equivalent of 1 million terahashes. And a hash is essentially a calculation. And so we can do, if you say 1 exahash, that means 1 million trillion, so 1 million trillion calculations a second. And so we today operate about 30 exahash. So we do 30 million trillion calculations a second in our data centers across the world. And you could think of it as just a measure of horsepower. Production capacity is really what it is. And we look at the industry in the Bitcoin world, there's a total global hash rate, which is what happens if you sum all of the hash rates of all the companies together. You get a total number. We represent today somewhere between 4 and 5% of the global hash rate in the Bitcoin world, and growing. We're one of the few miners who is able to grow their share of the global hash rate, because the global hash rate's growing annually as more people get involved in this industry and people grow. And most people can only grow at the rate the industry grows, but we're able to grow faster than that because of our model and how we essentially source sites and deploy capital.
Okay, got it. Makes sense. And then Could you talk about your software hardware infrastructure vertically integrated technology strategy and how that differentiates you?
Yeah, so perfect example is kind of Apple versus the non-Apple mobile phone world. Apple makes its own chips for its phones. They make their own operating system or firmware that runs in the phones. They make their own cloud system, iCloud, where you can subscribe to services and products, and that's where everything gets backed up, and that's what helps operate the phone. We're very similar to that, in that we have the ability to use ASICs by a company that we helped co-found called Auradine, which is the only US manufacturer of these computing chips for Bitcoin mining. And that's an important thing to realize, because the vast majority, over 90% of the chips today, come from China. And were we to get into a deeper trade war with China, those participants in the market that depend on the Chinese chips would be at a disadvantage. So we started a company a few years ago together with some of the top venture capitalists in Silicon Valley and some of the top design teams to build world-class technology for this space, which we've done. We also make the firmware, the operating system that runs in these miners, and the cloud software that kind of orchestrates what they do on a global basis. The benefit to that is that because it's all vertically integrated, again, think the Apple model, it all works more efficiently than if you are integrating third-party products in a stack, because we don't have to think about or worry about the all the other possibilities a third-party product has to deal with. So if you think about the cloud software, or the pool, as it's called in the Bitcoin mining world, they have to worry about different companies accessing. So they have a whole security layer that we don't have to have, because we're the only customer of our pool. We're the only person who uses our pool. So we can strip out the overhead of all that security stuff, because we're a closed box, if you would. Then how the miners communicate with the pool, again, we only use typically one or two machine types in what we do, so we can optimize the communication infrastructure, we can optimize the latencies, the way timing delays happen, to our benefit, which you can't do in a third-party pool system. We can strip out all of the operating overhead in the firmware or software that runs in the miners, because we operate so many hundreds of thousands of miners that we can essentially take away some of the overhead that is natively in Bitcoin miners, because they have to be designed to work either in a fleet or by themselves. And so we can strip out that excess overhead. And all of that does is gives us little gains. And the best way to see the benefit is if you were to compare the transaction fees, if you would, which is a metric I'll talk about in a second, which is, think of it as how we get paid for what we do. And you compare our fees, what we receive versus other miners, we earn a higher fee on average per block that we win, which is per block that we process. Because of this vertical integration, we can maximize the value of the fees. And we're not paying third parties for each layer of the technology stack along the way. So it makes us much more efficient. So that technology stack makes us more efficient and also more effective in what we do.
Okay, got it. That makes a lot of sense. And then could you talk a bit about the new, I think it's new, the 2PIC 700 and your plans to transform data centers and mining operations?
Yeah, absolutely. So one of the biggest challenges, especially in the AI world today, is the power consumed by these chips grows, and electronics convert energy essentially into heat. And they're very efficient at it. Unfortunately, that heat needs to be moved away from the chips, or the chips become damaged. And traditionally, computers and data centers have air conditioning to cool them. Well, the power density in AI and Bitcoin mining is very similar. You have huge amounts of power going through a very small surface area of components. And so if you have a very small area that is generating a lot of heat, the transfer rate of air for moving that heat away is very bad. So you have to go to liquid. And what a lot of AI systems and other systems have done is gone to what's called a on-chip cooling, which is essentially, think of it as there's a radiator attached to the chip that has water flowing through it, and that water absorbs the heat away from the chip and moves on. But we've now reached a point where that's not efficient enough, and it doesn't work well enough. And so you now have to immerse, you have to sink the whole thing, the whole computer, if you would, into liquid such that you can move that heat away. And there are two types of liquid immersion. There's what's called single phase. And think of that, it looks just like a car radiator cooling system, right? You have water in your radiator in the car. The water runs across the cylinders, takes the heat away, goes to the radiator where there's a fan blowing that cools the water down again, and then the water cycles back around the hot parts. And it goes around and around in a loop. That's single phase immersion. And what phase means is the liquid never changes into vapor. It stays in a single phase, which is it just stays a liquid. The two-pick stands for two-phase immersion. And essentially what we do is we enable the liquid to boil. So what happens when it boils? Well, it changes into a vapor. When it changes into a vapor, it takes 6 times the energy out of the liquid to become a vapor. And so it has this huge ability to just suck heat out of things. And then the vapor condenses around a condensation coil. This is kind of like how alcohol is made. You distill it. You turn a liquid into a vapor, the vapor then condenses, and you collect that liquid. So this is a closed loop kind of process. Very unique aspect of what we do is we have, and we've applied for patents for this, a very unique way of cooling these condensers and condensing the fluid that makes it very cost efficient and cost effective. And so it costs roughly about the same almost to use our two-phase immersion technology as traditional single phase. The big benefit to two-phase is you can pack 4 times the compute power in the same space. And so if you want to build a data center and this compute power is getting more and more dense, if you just look at NVIDIA's product roadmap, they're going from a need of 40 kilowatts to 80 to 120 to 160, all in the same space. We can do that. And so we're working with OEMs, original equipment manufacturers in the AI compute space to build solutions specifically for their needs. In the Bitcoin mining space, there's a huge need for this, and we're already starting to deploy two-pick in our own sites. And we're seeing some great benefits. One of the benefits that directly applies to our bottom line and our CapEx requirements is that because of how this technology works, we can essentially take a computer, if you would, that's designed to produce, let's just for easy math say 1 exahash, because that's the term we've been bandying about. And I can run it so it produces, I can put more energy through it than it normally would use, and I can run it at say 1.5 exahash. And by doing this in our two-pick system, the energy efficiency loss by overclocking, as it's called, I'm running it at a faster clock rate, is actually de minimis. And so I can get the same amount of exahash, but use less capital because I now have to buy fewer miners because I can run them at a higher speed without losing a whole lot of efficiency. And that means that we become much more capital efficient as a company. And compared to our peers, who let's just say are spending 1-to-1 on their hash rate to their normal clocking, we could spend 30% less, and which means we could take that 30% CapEx savings, apply it to even more capacity, and grow even faster than we're growing today.
Right. Okay. Well, you brought up some financial metrics, and I had one question for me, but then I also had a question come into my inbox just a minute ago. But what is your strategy in terms of the treasury management? And then furthermore, the question that came in was, last year you did exchange your converts, your December 26 converts at a 21% discount. Your balance sheet is strong, but how are you thinking about the 331 remaining convertible debt on the balance sheet?
Yeah. So from a treasury management perspective, we obviously produce this asset called Bitcoin. And up until the end of last year, Bitcoin was viewed as an intangible asset by FASB, and so you essentially could only impair it. You could never market to market. Since the beginning of this year, the rules have changed, so we can now market to market. And if you look at our Q1 results, you'd see we generated an adjusted EBITDA because of the fair market value calculation that was 2x what our over 2x our revenues, because the price of Bitcoin appreciated. So we believe that Bitcoin appreciates at somewhere north of 50% a year on average if you look over the past 7 years, over 153% if you look over the past 13 years annually. And so if we look at our weighted average cost of capital, it makes sense for us to essentially use the lowest cost capital for growth. And selling our Bitcoin, we would miss this appreciation in the asset that we have been able to attain. We're the second largest holder of Bitcoin of public companies in the US, right behind MicroStrategy. Well, not right behind, but there's a big gap, but there's nobody else in between. I'll put it that way. They have about 10 times as much Bitcoin as we do, but still. So we have over $1 billion of Bitcoin in our balance sheet. And that impacts how we trade. A lot of people view our stock as a perfect proxy to Bitcoin. And so we have an additional beta in our stock, which spot ETFs, spot Bitcoin do not have, nor does MicroStrategy, in that we essentially, like Warren Buffett does with gold miners, our cost to extract Bitcoin remains relatively constant compared to the price increase of the commodity itself. And so you get the benefit of essentially, by owning Marathon, of buying Bitcoin at a discount. That's kind of how you can look at it. And so you see our stock trades typically with a beta to the price of Bitcoin. When Bitcoin goes up 1 or 2%, we go up 3 or 4%. When Bitcoin goes down 1 or 2%, we go down 3 or 4%. So it works on both sides of the equation. But essentially, holding Bitcoin makes us a much stronger company, and it allows us a lot of flexibility, because it's essentially a way to hold our cash in an asset that appreciates better than treasuries, better than stocks, equities, and anything else. And it's a commodity we understand very well. And so it's a commodity that's also finite. This is the reason why we believe many companies should be holding 2 to 3% of their assets in Bitcoin on their balance sheet, because from a risk-adjusted perspective, it has a huge impact on your returns to the positive. So if you then go to the convert, in challenging times like this industry saw in 2022, having the overhang of the convert, having nearly $800 million of debt on a company whose market cap dropped significantly under $1 billion, was quite risky. And we believe that we want to be resilient as a company. And so we believed it was prudent to essentially take down and convert that debt such that our balance sheet became much stronger. And it is very much stronger today. As you look at the balance of that convert, in an interest rate environment where it's now 5+%, that convert is at 1% interest with no amortization, and it essentially terminates at the end of 2026. So we have a little over 2.5 years left of life on that. And again, we look at kind of what's the IRR on our capital. Should we spend more capital today to pay that down, or should we continue to invest in growth items? And as we look at the delta between the price of the bonds and the par value of the bonds, the discount has shrunk considerably as our stock has moved up in price and as Bitcoin has moved up in price. So the attractiveness of converting that in advance of its expiration has reduced quite a lot. When we did the conversion last year, we essentially saved our shareholders about $111 million versus waiting to maturity. So a significant amount of money. So we'll see. We keep tracking it. We keep looking at it. And, there may or may not be opportunities in the future for us to do something with it. But great question.
Okay, got it. And then I know you recently acquired 2 hosting sites from Generate Capital. Could you maybe talk about the details around those transactions, and maybe also a little bit about the 200 megawatt wind powered site from Applied Digital?
Sure. So Marathon grew kind of to its current size through a strategy called asset light. So in our industry, there are three constraints, and they all start with the letter C. Capital, you have to have access to capital, very capital intensive business. Capacity, which is essentially places you can put your mining equipment, so data centers. And then compute, which are the computers themselves, if you would. And so we had easy access to capital in 2020, 2021. We had easy access to compute, but we didn't have, if you looked at the ability of building and owning your own capacity, there's a long lead time. It's 18 to 24 months or more. And so we decided we would work with third-party hosting companies, essentially kind of like using third-party data center operators. And we rented space, paid for power, paid for them to operate the miners. And that allowed us to put 100% of our CapEx into just buying computers, mining rigs, essentially, and deploying them, and not spending any money on infrastructure or data centers. And historically, data center infrastructure represents about 30 to 40% of your overall CapEx investment. And so it allowed us to, given $1 billion of capital, grow that much faster than our peers who were investing in infrastructure. Now along comes the end of 2023, and with the upcoming halving, we realized a lot of these third-party hosting data centers were going to start losing value because these businesses were not going to be sustainable post the halving, where the amount of Bitcoin produced per block was going to be chopped by 50%. And so the profits of those companies would drop, they would become unprofitable and potentially go out of business. And so up until December of last year, we owned only 3% of our infrastructure. Through the three transactions that we did, the two Generate sites and the Applied site, we went from 3% owned to 54% owned at a lower cost than it would have cost us to build them. So the agile strategy, the asset light strategy paid off very effectively. It allowed us to grow to be the biggest, and it also allowed us to acquire over 50% of the infrastructure where we operate at a discount, essentially, to build it. More importantly, there was excess capacity at those sites that we didn't use. Other people were hosted in those sites. And by essentially terminating the contracts for the other third parties that were hosted, we acquired an additional almost 300 megawatts of capacity, which allows us to grow even faster as a company, because now we don't have to go build those sites. We just essentially can plug more miners in. And so we're in the process right now of transitioning out those customers from the sites and plugging our own miners in, which is one of the reasons why we can grow to 50 exahash this year and why we raised our growth targets so substantially, because we had the capacity available. And so today we now have 1.1 gigawatts of power under our control, making us one of the biggest infrastructure owners as well. And we'll continue to grow the ownership piece of the capacity that we own, the percentage owned versus third party, such that most probably by the end of this year, we'll be somewhere closer to 80%, while we're doubling in size from where we were at the end of last year. So all very exciting. And you know, if you've been kind of following the news, you'd see we have done something that no other Bitcoin miner has done before, or even energy company really, is that we just signed a memorandum of understanding with the government of Kenya to essentially evaluate all of the underutilized energy assets that they have and see how those could be monetized using digital asset compute and also potentially some AI, and work with them to really leverage Bitcoin mining as a way to not only generate revenues for energy that otherwise they were not generating revenues on, but also, Kenya is a unique country. This is the country that invented something called M-Pesa, which was actually one of the first digital currency systems that found broad adoption. There are tens of millions of people in Africa that use the M-Pesa system still to this day, and it's based on cell phone credits. And so you had essentially people in Kenya who were doing business with each other by trading cell phone credits instead of money. And today there are over 10 million people in Kenya that use the M-Pesa system, and it's now available, I think, in 14 countries in Africa. And we believe, as does the Kenyan government, that Bitcoin has the potential to kind of do what M-Pesa has done, only on steroids. And so we're working with the government to really look at how they can leverage digital asset compute to not only generate revenue, but also increase financial independence and help people, essentially do more business, which then grows GDP, which increases prosperity. And, one of the interesting things is when we go into a developing country and build sites, we bring with us technology, internet access, for example. We need internet access, so we have to develop internet access in the country. So we bring a lot of very positive things for the communities that we operate in, as well as tax revenues and other things. So that I think that really sets us apart from other Bitcoin mining companies, which tend to be more kind of taking advantage of the grid. We're actually helping countries and helping communities do things in a very positive way.
Right. Okay. And then, so you talked about more acquisition, it sounds like, of sites. Is that 80%, is that a level that is that an optimal level with still having some outsourcing, or is 100% more optimal with the halving coming?
Well, the halving has come and gone. So it happened in April.
Sorry.
There'll be another one in 2028. And so we're always looking, somewhere between 4 to 10 years down the road. And so we are going to continue to focus on developing our energy harvesting business, where we have essentially near zero cost energy, such that we become impervious to these halving events over time, and generate revenues from things associated to energy and digital asset compute and the combination thereof, as well as heat recycling. But more importantly, I think as we continue to build out the energy harvesting sites and more of these large utility scale sites, the third-party owned sites will essentially be diluted down to a de minimis portion. But I think it's still going to take a couple of years for us to get to the 100% point. There are some sites that we operate at from a third-party perspective that are very viable as third-party sites, and we'll continue to operate there as long as makes sense. We're also doing a lot of things via joint ventures in the international markets, which the market will learn more about as we make the announcements over the course of this year. And essentially they're similar to what we've done in UAE, which is a joint venture with the sovereign there. You could almost say we're hosted at that site, though we own a portion of the site. It is an independent company that operates, and our miners are hosted there, and we pay for that. So there will always be a portion of third-party hosted in what we do because of the nature of those JVs.
Okay. And we had another question come in from our audience here. Is how do you see your landfill gas business expanding?
So landfill gas is a very interesting business because in the landfill gas mitigation world, a portion of the gas is able to be sold and injected into natural gas pipelines. And so these are landfills that sit adjacent to natural gas pipelines. A portion of the gas is used for energy generation, where that energy can be connected to the grid. And then there's kind of what's left over. And what's left over tend to be small sites. So over time, there's an opportunity to get multiple hundreds of megawatts of power that way, but each individual site could be from 1 megawatt to 5, 10 megawatts possibly. And so it's a kind of business where you accumulate over time lots and lots of these sites. The best thing about them is that if you ever wanted to just not mine Bitcoin, you could always just sell the electricity. And so we view them as very investment-worthy assets. The best part of it, though, is that essentially it lowers our cost to mine Bitcoin significantly in the short term, right. And they continue to operate for the long term. And because our cost to mine is so low at these sites, it allows us to extract even longer useful life out of the equipment we put at the site.
Got it. Okay. Okay. That makes a good amount of sense. And then I guess we've talked about a lot of this so far, but maybe if we could kind of pull it all together here, could you talk about the strategic partnerships you have, the collaborations, and how they all contribute to the company's growth and development?
Sure. So take UAE, for example. We started working with the sovereign in UAE to help them leverage Bitcoin mining as a way to balance their grid. They had done some earlier pilots with different companies and not had necessarily great success. We came in, designed a site, test site, using our full immersion technology, our single phase technology. And the pilot site ran so successfully that they decided to pick us as their partner. And so we put together a deal to build a combination of two sites totaling 250 megawatts roughly in Abu Dhabi, one of which is in the middle of population center. It's quite interesting to see this field of containers in the middle of a city being developed around it.
Right.
And they help balance the load across the UAE on the electrical grid. And those machines have amazing uptime. I think it's in the 99.x% uptime, which is just fabulous considering the harsh environmental conditions. You know, the climate there is temperatures are over 100 degrees Fahrenheit, and humidity is 95% plus. So that was a great testament to our technology capability, really, and was kind of the basis for all of the technology we're beginning to deploy relative to liquid cooling going forward across our systems. The government in Kenya I just mentioned, so that's a strategic partnership there. We have strategic partnerships with companies in the landfill energy generation space, and you'll see more of those announcements coming soon. You're going to see us announcing partnerships around the heat recycling and heat reuse. You'll also see partnerships announced around things like how to leverage agricultural waste and generate energy from it. So, we will begin to build a kind of network of partnerships, which will be enabling partnerships and provide kind of extended reach for Marathon that will enable us to really grow in all of these different areas at an accelerated rate versus us doing it all ourselves.
Right. Well, Fred, last question from me, and then I'll let you get back to your day job here. But what are some of the key milestones and goals that we should be watching over the next 12 and 24 months for the company?
Well, our utility scale mining business, we're targeting 50 exahash, which would be roughly 2x what we did last year from a capacity perspective. So I think you'll see that as something to watch out for. You'll see us become more optimized in our cost to produce Bitcoin here post-halving. And then you'll start seeing initial successes and pilots around our energy harvesting business and our technology business as we begin selling technology components to third parties. And I think those are going to be the proof points to our diversification strategy. And then we have some other exciting things kind of in the hopper that I think the market will enjoy very much, which all will go to essentially contributing to a more diversified business. And when you take diversified revenue streams that aren't as volatile as potentially Bitcoin price are, or aren't dependent on Bitcoin price, you get a business that can still have very dynamic growth in the upswings in the market, but doesn't suffer the dynamic downturns of the market because it's more resilient to that.
Right. Well, Fred, this has been great. Thanks for spending time with us today. Is there anything you want to leave our audience with before I let you go? I know it told you 45 minutes, and we're right at 45 minutes, so I don't want to waste any more of your time, but anything else you want to leave us with?
I think we're really excited about interacting with investors, institutional investors and retail investors, and really getting feedback on what they think we're doing right, what they think we could do better, what types of information would they like to see us talking more. We obviously have lots and lots of stuff going on. We don't necessarily always talk about it with the public, but we're very open to interacting with all of our investors. And being a company that doesn't have traditional customers like many companies do, we view our investors really as our customers. And so we love the interaction.
That's it. Great. Well, Fred, thanks so much today. We look forward to watching your continued success, and we'll be in touch soon.
Great. Look forward to it. Thank you very much.
Absolutely. Take care.